All right, welcome back, guys. Today I just wanted to show you, I'm just doing some experimental paper trading. Ignore this. This isn't important, but actually what is important is the fact that on my paper trading account, I started actually trading based on how I live trade. Here's my live trading account. I switched to Apex Trader because they actually have a static account. I was on trade day, but they have a trailing drawdown. And I didn't blow the account, but I would have blown it had I kept trading it anyway because of the variance in the strategy. And the trailing drawdown is basically designed to fuck you. So don't ever do a trailing drawdown, even though, like, okay, let's go to Apex Trader. This is just an example. Let's see where their accounts are. Okay, so these, they have a trailing threshold. So that means it doesn't matter how much money you make, there's no cushion, right? The cushion, it can rubber bands to you, so you never have a cushion. So it basically, inevitably, eventually, you will have a loss big enough or enough losses in a row that it will fail the account, right? So these are all scams. Do not ever do a trailing drawdown. What you want to do is find a prop firm, if you're going to use a prop firm, that has a static version, which has no trailing threshold. Now the drawdown, the initial drawdown, is going to be a lot smaller because they still want to design it for you to fail. So what it means is that you're going to have to use very small size. For example, here they let you trade 2 minis. But in order to grow this account with the lowest likelihood of actually blowing it and actually being able to build a cushion, is I'm actually trading 2 micros. At any given time, I'm 2 micros. Once I get more of a cushion, maybe once I hit this profit goal or I get most of the way to it, I'll switch to 3 micros. But just saying, the drawdown is from 100K minus 625. So that would be like 93 something, basically. Like, okay, 94, it's like 93.75, I think, right? Yeah, so 93.75. And so I'm up almost, well, based on this, I'm up like, I don't know the exact number, but like basically like I'm up. It's basically like having a $625 account. So 472. Oops. Oops. Okay, so I'm up about 75% on the account so far. And you might think like $472 is that's not that much, but it is based on the fact that my drawdown limit is $625, which is, yeah. So it's not really $100,000. It's a $625 account, and so I'm actually up I'm up 75% on it so far after about a week or so of trading it, I think. Maybe a little bit more than a week. But anyway, this is not really what I'm going to get into today. That was just a side note. And so basically, well, okay, what I was saying is around here, I actually started applying my live strategy to paper trading, and my account grew very quickly over just a very small amount of time. This is the first trade that I've been in some serious drawdown in. I still think this trade will win ultimately, but it might lose. But there's a reason I'm trading these on paper, because I'm trading my edge at a specific time of day, but I'm also applying that edge during other times of day for paper trading. So I'm trying to discover more about it. So I'm trying to see like if I could use my edge at almost any time of day. I'm obviously not expecting as good of results, but I did 5x the paper account in like 3 days, and then it's gone up more since then. In like the last, like in 5 days, it's been up a little bit over 5x. But now I'm in some drawdown, so it's going to be a little bit less than 5x. If I lose this trade, I'll probably take a big loss, but yeah, sorry, I just got a text. So basically, what I'm here to talk about today is about fair value gaps and ICT fair value gaps. So the ICT teaches fair value gaps, and I believe they do work on higher time frames. For example, if you watch my older videos from months ago, I incorrectly believed that the bull market would continue. So admittedly, I was wrong about that. I did say, well, I do know in the long run eventually it will continue, but I did say that like I could see it pulling back into here, and once it gets below this low into this fair value gap, it'll reject from there, and it did that. Now it's sold off more below these lows, and now it's rejecting again. We'll see if it continues lower. I think actually there is a decent chance that the bull market resumes now, but I could be wrong because there's a fair value gap right here. So it could come up into this, reject from there, continue selling off if it really wants to. I would be a little bit surprised, but at this point, I'm not swing trading right now because I only swing trade during bull markets. So if you put on the where is it at? Well, we'll just do this. This is EMA. Where you're supposed to use SMA for cool emoji, but once the red line, which is the 10, is above the green line, and price is closing above both those lines, and then it pulls back to them, to me, that's kind of when I consider it a bull market. So like here, you could have taken a stab at a bull market. I would prefer to see it do that than go one more time and then do that. So it hasn't really done that yet. So for example, like what I'd be looking for before I start swing trading on like stocks and stuff is like, you see this, it comes up, pulls back. You could take a stab in there, but I would wait. And then you see it come up again, pulls back here and here. So like when I hear the bounce off the EMA or the 10 EMA or the 10 SMA, which is going to look kind of similar to this, but not exactly, then you'd be looking for a buy. So you'd be catching like this kind of move right here. You'd be holding it, take a partial profit, then you get stopped out. But anyway, at this point, you have a thesis that you're in a bull market because it keeps rejecting from the lows with these big wicks and it continues higher. So you're waiting for it to like really look bullish before you're swing trading stocks, okay, with cool emoji stuff. So I'm trading my day trading setup until then, which is, it benefits more from longs, but it also has short criteria that can also work pretty well. Anyway, why do fair value gaps, why are they very iffy on intraday time frames? Yes, they do get respected in a sense, but not really. Like for example, here, there's this fair value gap right here, right? Price trades up, rejects, doesn't close outside of the fair value gap and sells off. So ICT traders, and this is what ICT had me believing for the longest period of time, was that, gosh, go away, there we go, was that this was a fair value gap, it was a valid rejection, and I should be trying to target those kinds of things. And I just have to look on a different time frame, you know, if it's not working for me, you know, like for example, boom, right here, fair value gap, trades up into it, rejects and sells off from it, comes into it again here, sells off, right? And it looks valid, right? And yes, that is a phenomenon that occurs in the market that you can, I guess you could technically trade off of. The thing is the fair value gap has very little, I won't say nothing, but has very little to do with why this move went down from there. Now, I'm not going to tell you, because I don't want to go too deep into my edge, because honestly, guys, it's kind of a secret at this point because of what I've discovered. And as you can see, it doesn't work all the time, but I did 5x an account in like 3-4 days with my edge. I like had like pretty much no losing trades once I started trading the edge. Like right here, the 18th is when I started really trying to trade that edge. Actually, maybe a little bit sooner, but anyway, like I started the balance over, like, yeah, I don't know, just like, but really here's where I was really trying to trade the edge, and this is the result of that. But again, I can't get into it because I can't expose it live. I'm sorry, like I apologize, but I just can't tell you the strategy that works for that. I'll let you see the trade I took today, and then you can try to make an inference based on it. But I actually just, so when I'm trading live, I do very, I don't try to go balls to the wall like I'm doing on paper trading. I just kind of take like one trade per day, and but taking one trade per day, I'm up 75% in less than 2 weeks. So, you know, that's how it is. I could have taken more trades also. I would have looked to keep buying in this area, but I said I'm not going to do that. I was also really tired because I got bad sleep, so I kind of went back to sleep around here. But I would have tried to trade this on paper, because that's what I do, is after my one trade on live, I do my other ideas on paper, and I would have made like probably a decent amount of money on paper doing that. But again, my sleep schedule is messed up and I was just too tired, so I went back to sleep for the rest of the morning, or for part of the morning, and just caught up on some sleep. And then yeah, so then I tried to short here. It's not working out great, but I do believe ultimately it will be a short. It's not there. It's going to be, well, it's going to be like kind of in this area where price has rejected here before and kind of here. Like it's probably going to short from there again. It doesn't have to though. It could violate it, and you might think that's support and resistance trading. And again, like a support and resistance trader might catch a good short, like in the same place where I might be shorting, but the reasoning is different. And it's the same thing with fair value gaps. Fair value gaps are a pattern that unfolds, but you can't just trade any fair value gap, right? I'm sure you know that if you're trying to trade ICT. But the thing is, there's a reason why, and I can't explain it. I really can't. I'm sorry, but I can't explain why you can't trade like what the reason why a fair value gap will work or not is. It's all I'm going to say. It's a matter of where. Okay, so the reason this fair value gap is respected is a matter of where it is in price action. So the only hint I can really give you is that in the y-axis, like the price axis, there is this fair value gap is within a larger area where price has a very high probability of rejecting. Okay, but you don't have to short from here. Realistically, you would have been shorting from here. And again, I can't explain why, and I'm not going to go left. If you look at this chart and then you go left on your chart, you might be able to figure it out. But it would take a lot of studying, paying attention, and probably take you a few years to start seeing what I'm talking about. I'm sorry. Okay, but it's just what it is. The hint I'm giving you that you should walk away with is it does have to do with time, but this is not the time. But this is respecting price on the y-axis that was in the same area at a specific time on a previous day. That's what I'm going to say. Okay, that's all I'm going to tell you. So there's specific time of day, and price will respect the range that is established by that type of day. Okay, so I pretty much kind of gave it away there. If you're smart, if you have a good IQ, you'll probably figure it out. Okay, but it respected a specific range that was set at a specific time of day, and that's why it rejected. So I guess the fair value gap is just confluence with it that you could trade. But again, if you're trading it well, you would have been shorting from around here. So anyway, yeah, that's kind of the secret with fair value gaps. Because, like, for example, I shorted this fair value gap here, but I wasn't even looking at the fair value gap. I was trying to short from a different time, from based on where a certain candle was, because I'm experimenting and trying to figure out, like, all the conditions and nuances of it. Again, like I said, I believe actually that I don't have a stop loss right now, and that's because it's not that I don't have a place where I stop, but it's just that the way my stop loss works is that a candle has to close in a certain way in order for me to stop out, which sounds weird, but that means I have to be in front of the charts watching it happen. And then, sorry, basically, like, for example, let's say this was the area I was looking at. Okay, it isn't, but okay, so if I was buying here, my stop would be a close below the low of this candle. So I couldn't just put a hard stop there, because if it wicks down and then goes back up, that's not a stop condition for me, right? Or it would be a second candle closing below the low of this candle, which closed below the low of this candle, right? So then I would stop out right there at that close, or I'd stop out at the low of this candle, right? Those are usually my two stop conditions. Is a candle has to close below the low of where my stop is, and then the next candle has to go below the low of that candle, or that next candle has to close below the low of that candle. Those are the two stop methods that I use. Okay, and that's another big hint, is you should start thinking about things like that, because price action is designed to be deceptive. And if you put hard stops, like look at these wicks, right? They say bodies tell the story, wicks do the damage. ICT did say that, and that is one way in which he's not a fraud. That's completely true, and I'm sure he's not the one who made up that quote, so he can't take credit for that. But for example, let's say here you were a buyer. Like, let's say you were a buyer sometime around here, right? You would get stopped out there if you had a hard stop there. But if you were waiting for the candle to close below the low of that candle, you wouldn't get stopped out and you would have won, correct? Okay, so that's kind of the gist of what I'm getting at. Okay, that's another little tip or trick that you should glean from me about how to become a better trader. I'm not going to give away my edge, but I basically gave it away without telling you it deliberately. Okay, so if you can't figure it out based on this video, you probably don't deserve to. Okay, and I don't mean like you never deserve to. I just mean you're not at a point right now where you understand trading enough that you would see what I'm talking about or be able to make an inference based on what I'm talking about. Okay, so if this seems vague, it's because you're not ready to understand it. When you're ready to understand it, it will occur to you and you will get it right. Okay, so that's all I got to say. Take care, guys. I'll see you soon.